So we've been discussing different qualified or tax-favored retirement plans, and in the last lesson we covered the IRA and the Roth IRA. Today we're going to cover the 401k, 403b, 457, and the SEP accounts.
Now, let's look for a second at the SEP, the Simplified Employee Pension Plan. This is for a self-employed person, and they're nicknamed SEP IRAs because it allows you to deduct up to 15% of your net profit by investing in a SEP. If you make $100,000 profit in your business, you could put up to 15% in your SEP. This year, there's a maximum of $45,000 that you can put in there. But that phone's getting ready to ring, and that will change every year.
So remember, you can always look up the max contributions online. So I Googled SEP max contribution of 2020, and this has actually changed. So you can do up to 25% of your net earnings or $57,000, whichever one comes first. So if my business makes $100,000 in a year and I want to put away 25% of that, I can put $25,000 into my SEP. And I'm good with that because it's technically below $57,000 and it's below 25%. Let's say that I wanted to put in $57,000. I could not because that would hit the 25% maximum. So it's one or the other, whichever happens first.
Now, the trick with the SEP is this. It's very good for those of you that have small businesses with very few employees or very few employees that stay with you very long. The SEP is very good. When we first started our business, I did a SEP. But if you have employees that have been with you more than 3 of the last 5 years, you have to put the same percentage of their income into the SEP that you put of your income into the SEP.
So in our example, let's say that you made that $100,000 and you wanted to max out your SEP at $25,000. If I, as the owner of the business, put $25,000 into my SEP retirement account, I would need to put $25,000 into every single one of my employees. So if I have over 3 employees, I've already spent the entire $100,000 that I've made, $25,000 on myself and then $25,000 on each of my employees.
So it can get it's a 100% match. I mean, it can get very expensive if you had 25 employees that have been with you for more than 3 of the last 5 years and you're trying to put 15% of your income into a SEP. Whoa, you're getting 15% of all your people. That's a lot for an employer to put in as a benefit. So it really works for small businesses or what we'd call cottage industry people. You know, like when Sharon and I started, we were in the cottage. We started in the living room, you know, and so it's great when you're at that stage of your small business, or if you're in a business where you have high turnover of employees and you're very, very seldom going to have one that stays with you for that long because of the nature of your business.